If you're like anybody else, your inbox, your mailbox is flooded with 1099s, W-2s, all these documents because it was the end of the year recently and it's about time to file your 2025 taxes. But notice what I said. I said it's time to file your 2025 taxes.
You didn't say plan.
No.
It's
time to get ready and plan for your 2026 taxes. It's too late to go back last year, but you've got 12 months ahead of you to make sure that your plan is as tax efficient as possible here in 2026.
Yeah, it's too late to plan for 2025.
It's
over. Everything that happened or didn't happen is etched in stone. Now it's just a matter of reporting it.
Now, there were a lot of changes last year with the big, beautiful bill. Taxes are the reduction is permanently extended. There's some increased deductions.
Now, what do you mean by permanent?
Like that. Well, before the big, beautiful bill, taxes were scheduled to go up January 1st, 2026, unless Congress did something. Well, Congress did something, and what they did is they said that the 2017 Trump tax cuts would be permanently extended.
Right, until they're changed again.
Because
I wouldn't want somebody to have a tax plan over the next 10 years
No.
at these tax rates.
No,
because that may or may not happen and probably won't.
Exactly. I like to think of tax rates like buying a gallon of milk at the store without an expiration date. When you buy it, it's probably good. But that milk is going to go bad. You just don't know when because it doesn't have that date on it. So you're having to smell it, see what's going on. But you might as well drink it while it's still fresh. Taxes, I think, are very similar. There's a lot of things down the road, problems with Social Security, problems with Medicare and our national debt, a lot of things down the road that could force tax rates to be higher. And I think a lot of people feel that way. So there's two things you can do. Number one, you can pretend like that problem doesn't exist, or you can take action while taxes are at historically low levels. Victor, what are two things that you think people should be thinking about this year as it relates to having a tax plan?
Well, if you're retired, the number one thing to calculate now is how much income do you need and where's it going to come from in the most tax-efficient way. You know, I like to refer to it as buckets. Mm-hmm. You know, we have various buckets of investments, cash, money, whatever it is, and what one gives you the most advantage. You know, if you're a married couple, you have a standardized deduction now of over $30,000. Mm-hmm. So, you know, the first $30,000 you make is tax-free. Mm-hmm. You know, you're not going to pay tax on it.
Right.
So everything above that, though, needs to be calculated is how is that going to be treated tax-wise, and then can I do this and stay below the 22% bracket, or no, our lifestyle means we have to do this, but maybe could you get it somewhere that's more tax efficient and not go into those higher brackets?
Exactly. I think it's very strategic to say, I've got money here, here, and here, taxable, tax-deferred, tax-free. What do I use? When do I use it? And being smart about that strategy, because we can do strategic uses of different money to avoid Medicare surcharges, to stay in a lower tax bracket. There's a lot of things that can be done with the proper strategy.
But you need to plan in advance, because once you get into the year and you've started down using a certain sequence of monies or whatever, it's just really too late to alter what's happened.
It certainly can be. I think, too, the big thing for this year is taking advantage of that big, beautiful bill senior bonus deduction, the extra $6,000 a person, 65 and up for 25, 26, 27, and 28. There's 3 more tax years where that's an extra, if you're a married couple and you're under the required thresholds, that's an extra $12,000 of income that you can get tax-free.
Right. So now you're up to over $42,000.
Over $42,000 of income,
Yeah.
tax-free. And that's a common misconception, is people were thinking, I'm not going to have tax on my Social Security. Well, that's not true. The taxation of Social Security didn't change. But these increased deductions mean that a lot of people receiving Social Security now are going to be receiving it tax-free because there's that big $42,000 of tax-free income.
Right, based on, what your overall earnings are.
Correct. There are some limitations, thresholds, things like that. But the bottom line is, if you don't have a plan for your 2026 taxes and how to legally reduce them, the IRS has one for you. And there's not many things I can guarantee, but I can almost guarantee that the IRS's plan, if you let taxes happen to you over time, their plan is going to result in a higher lifetime tax bill than
Right.
if you take control. They've made the rule book how they want it to be. Now we get to look at the rule book
Absolutely.
and make a plan together to legally reduce your income tax.
Right. And, income tax or taxes in general are generally a retiree's largest expenditure.
Right, exactly. You've got your house paid off.
Yeah.
You maybe have a few $100s a month for Medicare and a supplement. Taxes, tens of thousands of dollars a year between federal, state, local, property tax, all that good stuff. It all adds up. So take action and make a plan. If you don't have a plan, or you want to make sure that your plan didn't miss and it helps you take advantage of every opportunity, go to ghwealthadvisors.com, click the link below. We'd be happy to visit with you and see, hey, did you think about this? Have you looked at this? And help you make sure that there's no stone unturned to make sure your money is working and you're keeping as much of it in your pocket. Go to ghwealthadvisors.com. Having a happy retirement, I think, Victor,
Yeah.
is not overpaying the IRS.
Oh, absolutely.
Make sure
Yes.
you tip your server. Don't tip the IRS. Go to ghwealthadvisors.com, and we'll see you next time on the Happy Retirement Show. Bye-bye.
Bye-bye.
Start building a more secure future for you and your family. Take the first step toward financial clarity by scheduling a no-cost, no-obligation consultation with Grayhurst Wealth Advisors. See if we're the right fit for you by scheduling a consultation. Call us today at 513-984-5999 or click the link in today's show description to get started.